here to do just a quick live update for you. As always, I'm gonna try to keep my soapbox stuff out of it. We'll just hit the markets. We're gonna talk about what's going on in the futures market, some key levels to watch. Then we'll pop over to Forex, see what's going on here. Yeah, we could actually probably hit Forex first. We'll start with Forex today. Let's start with Forex today. Then we'll go to futures. Then we'll go to crypto. Then I'll let you guys go on and get out of here. Hopefully I've got some nuggets of information that help you along, help you with your trading. That's my goal, is to provide you with some good quality information to keep things simple and help you potentially become profitable down the road by finding that right trading plan that's a simple trading plan that has the steps that you need, covers all the things that you need to have positive expectancy over that long term. All right, so let's do it. Let's pop into the Forex market and have a look at what's going on, because we're 3 minutes in to a brand new US Forex session. So what's going on over here? Well, again, for Forex, I utilize a currency strength meter, which allows me to see which currencies are moving, and that helps me determine which currencies I'd like to pair together and trade. So what we're looking at this morning is coming into the new US session, which begins at 8 a.m. US Eastern Time. So it just began 3 minutes ago, literally 3 minutes ago. And what we see coming into the session is we've got some divergence. We've got, over the course of the last few hours, the yen has been strengthening in relation to other currencies. So the yen's been a stronger currency here. Not super strong. There's no just big, straight up lines where it's really just showing a ton of strength, but it is stronger than our other currencies. From a weak currency perspective, we've got the pound down here on the low side. For the last few hours, the pound has been weakening coming into the session, and as the session's getting started, we're seeing some divergence between the yen and the pound. So we're seeing that these two currencies are diverging from one another so that they're getting some decent movement. Our stronger currency is continuing to strengthen, and our weaker currency is continuing to weaken. So that tells me, hey, we've got a pretty good opportunity to potentially pair these together. So then the next thing is, well, let's go have a look at the chart. And there's a few things I look at. We try to keep it pretty simple. One of the things is to see what our current movement has been. So and as it compares to that range, right? What's the average range? So for the pound yen, the average range is, I could pull this over here. So for the pound yen, the average range is, anywhere from a low of, let's say, 90 pips to a high of 250, which is a little bit outside of what it typically is. This 250 over the last 30 days was driven by some really high volatility as the markets were just going nuts with the coronavirus stuff. That settled down over the last couple of weeks, and we seem to be getting back into more normalized ranges with these currency pairings. So anyway, we might look at it as really it's more between, let's say, 90 and 140. Yesterday it moved 170 pips. So I look at this and say, well, is there opportunity for this to move 20 pips? Seems like it. It's got a good opportunity. Then I'll look down here at the volume detail and say, okay, well, how does the volume, when we look at the price action and price versus the volume, how is that shaking out? What's shaping up there? Are we seeing volume that's favoring buying into the market, or are we seeing volume that's favoring selling into the market? So in this case, the pound is weakening. It's a pound versus the yen. The pound is weakening against the yen. So we would want to see a downward trend. We'd want to see that we've got increased selling activity coming into this new session, and that would allow me to say, okay, great. Well, I've got my breakout box, and this is an EA that automatically paints onto the chart right at 8 a.m. US Eastern Time. So it paints on here, and we're able to say, okay, well, great. If price continues in the direction that it's been setting up if price continues to do that, so if the yen continues to strengthen and the pound continues to weaken, which, we have the indication here that it looks like it's, it's setting up to do the things it's looking like it may want to do, then I can go ahead and click sell. So if price breaks through the bottom of this breakout box, then it's going to fill the order. Now, if everything changes and suddenly as the new U.S. session, gets further underway, the pound just takes off to the, to the stronger side here, then price will move up and this order won't be filled, and I just close it out. No harm, no foul. If it does continue on and we get some momentum where we see this divergence really continue, then it'll break through the bottom of this box, it'll fill my order, and as it fills the order and price moves in my favor, it'll ratchet off risk 1 to 1, eventually taking profit at 20 pips down. So this gives me this process, super simple. I just identify, what's happening from a currency strength perspective. I double check that or confirm it against, look at the range. Do I have room for potential continued movement? And then B, is my volume detail shaping up to indicate that we have the right condition for the direction that we're trying to move? If all those things are yes, then I can enter a trade. Now, it doesn't mean the trade's going to win. It doesn't even mean the trade's going to be filled. We're just simply saying, based on what we're seeing here, if we utilize this, it gives us a little bit of an edge to say, hey, we've got the best opportunity for continued movement. Doesn't mean it will. We've got the best opportunity for it, so we're going to enter a trade. And now, math is on my side. Once I enter that trade, math becomes on my side using this process, because over time, obviously 1 trade, 5 trades, 10 trades is not a big sample size, but over a large sample size, this gives me a positive expectancy, because if it does break through here and every trade that's actually entered, what I end up with is a static take profit at 20 pips, and I have a stop loss that trails pip for pip. So my stop, or my loss, is always going to be less than my average win. My average win is always going to be 20. My average loss, there's going to be some that might touch in and move against you immediately. There's going to be others that you ratchet off risk and maybe only have a 5 or a 4 pip loss on them. They might come all the way down here and then reverse. So ultimately, the average loss works out to be lower than the average win, which gives us that positive expectancy even on a coin flip of the trade. But you're doing better than a coin flip because you're looking at market conditions and taking trades that give you the best opportunity for success in that current condition. So anyway, so there it is. I'm going to put that trade on, I'm going to park it, let it do its thing, and then move on to have a look at some other opportunities that are out there in the marketplace. So let's see what's up next. Let's have a look over here at the futures market. What's going on in the futures market? Well, we look at 3. We look at what's happening in the S&P, E-minis. We have a look at crude, and then we'll have a look at gold. And now in the futures market, traded a little bit differently. I'm looking at support and resistance. It's a very speculative market, so we can utilize other strategies there that we don't really utilize in the Forex market. So if we're looking at futures here, we're utilizing support resistance, and we're also utilizing the current trend or the bias. So what I do here in the futures market is we're looking at bias. So I first look at the 4-hour, and here on the E-mini, so we can see the 4-hour bias is long. So we have a long bias on the 4-hour, and then I'll look to see if that's confirmed in the 30-minute. And over here on the 30-minute, we have a long bias as well. So both of these are setting up, they're in agreement. So that's telling me that what I would want to do in this case is look for potential buying opportunities. Now there's a number of ways to go about that. We've talked about those in different classes and different times. There are different ways to trade that market. So there's different ways to look for long opportunities. One is a breakout. So look for key areas where price could move above, and as it moves above those key areas, you could buy. That's one way to look for a long trade there. The other would be waiting for a pullback to a key level, buying off of that pullback, and then letting it continue on. or some combination thereof. And the combo trade, we might look at what's happening on the 30-minute for the bias, and then actually trade it on a 5-minute. So if we have a long bias in the 30-minute, we might go down to a 5-minute and then look for pullbacks that are in the direction, counter direction of that bias, and then trade breakouts of the previous candle, previous bar. So a lot of different ways to approach it, but from what I've found, I think a way to trade with the trend, because we often hear that, trade with the trend is your friend, yada yada yada. Those sayings are there for a reason. They're there because that's, we're just trying to be the flea on the back of the elephant. We're not trying to step in front of the elephant and yell stop, right? We want to do what the greater market is doing, and that's why we identify bias and we identify trends, and then we trade with those. It becomes a dangerous situation to try to jump in front of that elephant or that locomotive as it's moving in a certain direction, hoping that it's going to change. Now I know that there's a lot of counter trend strategies that are out there, and they're great strategies as well. If you're more of a contrarian, you like the counter trend trades, certainly look at those. See if because that might fit your personality better than what I'm showing you here. There is, and I say this every day, there is no silver bullet, there is no magic pill that just suddenly makes you successful in the marketplace. What makes you successful in the marketplace is finding a strategy and implementing that strategy consistently. As long as that strategy gives you a little bit of an advantage, so you just need a slight advantage in the marketplace, and then you have good money management rules behind it and the mental fortitude to stick to those money management rules. And I always point to the back of my head because I think that's where my subconscious is. It's probably up here somewhere, but it's that little voice in the back of your head, the subconscious, that gets us into trouble, and we start deviating from those two big things that are really the key to success in the marketplace, which is consistency and execution of your plan and money management, right? So anyway, don't want to go too far down that rabbit hole. I can certainly go off on tangents with that stuff. So what we're looking at here would be potential buying opportunities, and it's interesting. I'm looking at this yesterday. Yesterday we had a situation where the bias was reversed, right? We had the 30-minute bias was short, but the 4-hour bias was still long. So obviously what I mentioned yesterday was, well, don't, if you're trading with the trend and your trading plan says both biases need to be in agreement with one another, then you don't trade, right? Yesterday was a great example of that. Just don't trade. It was kind of a weird market that didn't really do a whole lot. It ended up, we started down here. It pushed up in the direction of the 4-hour bias, and then it pulled right back. So you basically ended it right about where you started it over here at 8:30. So anyway, today biases are in alignment. Now again, just because the bias is in alignment doesn't mean that it's going to win either. There's some point where things are going to change and we'll be wrong. And that's where money management comes into play. So, but anyway, long bias on the 30-minute, long bias in the 4 hours. So that would tell us that we would potentially be looking for buying opportunities. So I mentioned the breakout, I mentioned key areas, pullbacks to key areas. What are some key areas to pull back to? Well, prior close, that's always an interesting spot. We often see on an intraday basis, price potentially floating back to that prior close or the open of the off trading hours, and we see price bounce around there. So that could be a support level for us. This 2750, maybe even a little bit higher, has set up as a pretty interesting area. If we look at this yesterday and then in off trading hours, this area was pretty well respected. If we go down to a 4 hour and look at this isn't a area that's currently on my chart, but if we look at this, we can see where highs had come up to 2750. We see 2750 back here, where again we had pushed to highs and rejected it. Down here it pulled down to it, and it supported it for a while. Flipped around kind of both directions and came back. We supported it here, supported here, supported here. So 2750 is certainly setting up as a fairly key area that isn't a current support or resistance line on my chart, but it could certainly is shaping up to look like a pretty key area for us. So we've got 27 what is this? Yeah, so 2775, 2750 looks like some key areas here that we'll need to break and close below if we're going to see that 30-minute trend start to change to be short again. Now, if it does change to short, we're in that same quandary as yesterday where our 30-minute doesn't agree with our 4-hour, and then we have to take action based on that. We have to decide what are we going to do. You know, if our trading plan says they don't agree, then you stop trading. Stop. It's okay to not trade. Keep reiterating that as well. Over on crude. Crude is in a downward trend. 30 minutes down, 4 hours down. We certainly are. We've come back to this area, $20 crude. That's been a pretty key level for us. It came down to 1950 yesterday. We were in the teens for a large part of the day yesterday. We did talk about pullbacks as we came into the live session. We did talk about pullbacks, up to 20, a little higher up to this key level here, and we see it did pull back to it, and then we were able to sell off of that. Now, if you were selling a bounce strategy, if you were playing a break strategy, it never broke out. It never gave us that chance to really break lower, to go down. A lot of folks, when it gets around 20 is a key area, very key, psychological key, and you've also got just a lot of money behind it, where we folks don't want to see oil in the teens. So we're seeing a lot of activity stepping up here as we're around this 20 area. So it could certainly be a rally point. However, with that said, the trend is still down. So this is where, if you're trading with the trend, you'd continue to look for selling opportunities. The 4 hours down, 30 minutes down, and do you want to step in front of this locomotive and hope, just hope that you're right, or do you want to take action based on what the current trend is, and the trend is still down? Folks go, well, we're at 20, you can't go any lower. That's, like I said yesterday, folks have been saying it can't go any lower, since it was 30, and then it was 27, and then it was 25, and so on and so forth. It can go lower. There's nothing preventing it from going lower other than buyers and sellers. That's the market. The market's made up of buyers and sellers, and the price goes in the direction of the least resistance. And unfortunately right now there's a lot of resistance around 20, but it doesn't mean it cannot go lower. The trend is down. So until that trend changes, if you're trading with a trend, you'd stick to your plan and you'd continue to look for shorting opportunities. Or, if you're just dead set on the fact that it can't go any lower and 20 is going to be the bottom, then sit it out until the trend changes, and then look at opportunities after that trend changes. I caution folks against trying to be the hero. I've been that guy in the past. Want to be the hero. I want to be the guy that calls the bottom. I want to be the guy that calls the absolute top. It's dangerous. It's dangerous to trade. That's an emotional way of trading. It's not in your best interest. So over here on gold, gold yesterday, kind of same as crude, really, just kind of chopping around over here, not really doing much. The 30-minute trend is still up on gold. The 4-hour trend is up on gold. 27, that'd be amazing. 1750 had been kind of a key area for us. 1747 is where my support and resistance line is over here. We'd seen it pretty well respected over the course of off trading hours, and then finally broke above it. We'll see, price came back. It didn't quite get all the way down to 1747. It did come back to 1750 and is pushed on. So, gold, we'd continue to look for buying opportunities as we have that well, I guess opportunity. So what we'd look at here is to see if you're looking for a breakout, look for key areas for it to break above, which is already kind of done for the day. But we could even look up here. 1770 is certainly setting up as an area of resistance up here. So we could look at 1770. If it breaks through that, could certainly be an area to look for continued upward movement. Although it's moved quite a bit for the day already. So do take that into consideration. If you're looking at pullbacks, obviously 1750, 1747, areas to look for potential pullback. before taking it long again, or some combination thereof. All right, so I think that's it. We've hit what's going on over here in Forex. We've hit what's happening in futures. Let's real quickly pop over to the crypto market and then let you guys get on with your way. I was just having a quick look at what's happening with the this guy. So as we're scrolling through, pound versus the yen. Yen's continuing to show a little bit of strength. It's strengthening against our other currencies. Pound's continuing to be a weaker currency. We've also got the USD that's weakening as the new session gets going. Looking at the trade we have on here, it hasn't filled us in yet, but looks like it certainly might. If we get this to continue here, little pop could certainly push us below this, which would then fill this order, and at that point we'd be just simply letting the trade do what it's going to do. So yeah, we'll see where that goes. Over on the crypto side of things, I'm just looking at Bitcoin and Ethereum over here. So not going crazy digging into other currencies or anything at this point, but looking at Bitcoin and Ethereum. Let's start with Ethereum. Yesterday we talked about the fact that the trend was still up. It certainly was coming down to the point where it was looking like it might cross over, but over here, Ethereum, we can see the trend, our short term still above the longer term moving average, which indicates a long bias. We talked about a couple of things yesterday. We talked about potential of buying a pullback to a key level, or we talked about buying breakouts of key levels. So if you had that on yesterday, you might have gotten filled overnight, and then you'd be in a trade currently, or on either one of these, a pullback or a breakout. So certainly looking good there. It's coming up. It came right to a larger resistance level up here. It hit that resistance and pulled back off of it. So anybody's guess as to where that'll go, but the trend is still up. So a couple things to look at there. If we pull back, we certainly have this area of 160 over here. 160, which was previous resistance, would now become support. We'd see if we pull back to 160, take it long from there. Even 164, 165 area up here, looking like another key area, which isn't a line on my chart, but just watching how price has interacted around these levels. 164 certainly would be a potential area for us where it's broken above it, and we can see where price had come here as support, broke it, resistance, and now we've got potential support again here at the 164. So pull back to 164 even could be an interesting area to buy off of on Ethereum. Of course, the flip side of that would be looking for a break. If you're not presently in, looking for a break of 172 to see if it breaks above, and then continue along from there. Bitcoin, same thing. Our bias on Bitcoin flipped, and we're actually in right now in a short bias. It's really kind of mixed up here. Yesterday, bias was still long coming into the market, but it did continue to pulled back to the 6,700 area here, and just kind of hung there for a lot of the day. Overnight, it has pulled back down to 65 and really kind of shot off of here. But that 6,700, good key area for us. And now we've moved up to 7,000. 7,000, another area where we see resistance, and now it's kind of banging around over here again. So we'll see 7,000 certainly looking like an interesting area to see where things continue here. 7,100 even as an interesting area as we get higher. But for this one, looking at pullbacks, 6,900 certainly setting up as a key area down here. So we get a pullback to 6,900 could be an interesting spot to look for continued longs on Bitcoin. It's interesting, right? There's a lot of stuff coming up. We've got I guess right about a month until the estimated time for the halving in Bitcoin. So Bitcoin, if it rallies, it typically pulls the rest of that crypto market with it. There's a high chance of that. I mean, again, there's no certainties anywhere, but as we get to the halving, there's going to be a lot of news, a lot of hoopla around it. probably that'll increase interest, and that increased interest might drive activity, which could help feed that fire as Bitcoin potentially rallies around that halving event. So keep your eye on it. That's a really interesting time coming up for us. So I think that is everything, guys. I think we've hit it all. We've talked about futures, we've talked about Forex, we've talked about Bitcoin, we've given some key areas to trade off of, key things to look at. As far as strategy itself, 3 very basic, very simple strategies that actually work, and we show them how they work daily here. They work. You don't need a ton of indicators. You don't need a ton of tools. You just need some simple stuff to put on your charts, a good trading plan around it, and then consistency in action. And the rest falls into place. So anyway, that's it. If you've hung with me this long, thank you. Please like the video and share the video. Share it with your friends, share it with your family. I'm not charging for my years and years of experience in this. I'm giving you daily updates, daily information to help you along. And if you have questions, shoot me a message on Facebook. I'm happy to help out, or you can send an email over to support@makemoneyfromyourlaptop.com, and I'll be happy to help you out there. So that's it. As far as tools go, I need to do more showing you the tools. We show the breakout tools, but I have other tools that we utilize as well in the marketplace that are for sale on the website. So certainly if you're looking for some good tools, some good indicators, basic tools, basic indicators, because I don't feel like you need a ton of complicated stuff, but those are available on the website as well. So that's it for now. Have a great day, and we'll talk to you soon.